Hi, my name is Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Tuesday, September 9th, and we're in the middle of the US session. The British pound has made a sharp turnaround from being the top performer in the first half of 2014 to one of the weakest currency at the moment of the majors. It has been pressured by a leveling off in economic data as well as some disinflationary pressure. It is also dragged down by increasing prospects of Scottish independence from the UK. Tomorrow's Bank of England inflation report will be key. If the bank continues to expect declining inflation, the pound might continue its decline, but the Bank of England also has a chance to give the pound some reprieve if it can suggest a rate hike is still in effect or is still planned for early 2015. Let's take a look at the pound dollar and pound yen charts ahead of this key report. The pound dollar's decline has been so sharp we need to take a look at the weekly chart. In terms of yearly volatility, pound dollar is getting there. You see this decline from 1.7191 down to about 1.6070 area. This is about what an annual range would look like. Okay, now that doesn't mean that we will definitely get support here, but as cable approaches 1.60, we see a 200-week simple moving average, as well as the key Fibonacci retracement level of 50%. Okay, right here at 1.60. Now, as the RSI, the weekly RSI dips below 30, showing oversold condition, we should see some support here around 1.60. If the reaction after the Bank of England is decisively bearish, we might want to give this support some elbow space, as we saw here in late 2013 and then here late 2012. Okay, so we might give it some elbow space towards 1.59 as a support level. Perhaps we can finally see some consolidation around this 1.60 level, as you can see that it is a sticky level, and we do see price consolidating around it, maybe a little bit above it. Now, the upside for this consolidation scenario will have to be limited to the 1.63 support resistance pivot, and we saw 1.63 as a common high throughout 2012, 2013, and late 2013. Okay, now if the Bank of England is ultra dovish and the Scottish independent movement becomes more realistic, we might not see this consolidation around 1.60 that we saw in late 2013 and 2012. We might see price dip towards the 61.8% retracement level at 1.5721, down to the 1.57 common resistance level here to be tested as support. While the sterling pound has been weak since July this year, the Japanese yen has been soft since 2012 after the Bank of Japan announced that it wanted to double its monetary base through stimulus measures. However, in 2014, Japanese yen has been holding off the bullish attack from the pound. Although pound yen did make a fresh high on the year at 175.36 in July, it has fallen back to 170 by September. The market is testing a previous support pivot around 169.50 and is just above the 50-week SMA. The weekly chart still shows a bullish pound yen, so it will have to take an ultra dovish Bank of England inflation report to shift this uptrend, to shift away from this uptrend. If the reaction brings the pound yen below 169, then the bearish outlook might have some life to it, at least toward the 163.87 low on the year. However, if after all is said and done this week, the pound yen remains above 170, we have to entertain the possibility that it is still neutral bullish, and the 175.36 high on the year will still be in sight. And that wraps it up for this edition of the Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com, wishing you safe and good trading.